Everybody, RC Peck here. All right, US dollar lifetime high. Richest person on the planet wanting to buy Twitter. Bonds crashing. War in Europe gets worse. There is a lot going on. So we really have to understand where people are going, where people are leaving. I mean, where they're putting their money, where they're taking their money, what they're actually doing, not just what they're talking about. Stick around, we're going to talk about that and whether the economy gets back to pre-pandemic levels. That and so much more. Hey everybody, RC Peck here with my weekly update. So we have a few things we want to cover, or that I want to cover. I definitely want to talk about Elon Musk and his $54.20 offer per share for Twitter. An absolute ridiculous price to ask, and I'll point out why exactly. I also want to talk about the economy and the 160 million people who used to go to work every day and what that means for our economy going forward, for interest rates, for companies, for profitability. I also want to talk about the US dollar. We have to look at the US dollar because people are panicking into it. And that is really moving a lot of things, a lot of pieces on the chessboard around. So I'm going to talk about those and so much more. Let's get to this. So let me do this. Let me start with Twitter. So here's a price chart of Twitter. This is a 3.5-year price chart of Twitter. That black line is $54.20. So that's what Mr. Musk, little Elon, thought I guess he thought that's what Twitter was worth per share, $54.20. Now, I put it on here just showing you not really that good of an offer. I mean, heck, it was in the 70s last year. Typically, when you want to take a company private, you've got to really put a good offer in. And this stock has just been going, up and down, high of in the, maybe 80, low in the 20s, up and down, up and down, up and down. So I really think if Elon's not in, the news for a day or two, he has to do something. And this kind of feels like that. So he's not going to buy it. But it'll be interesting to see if someone actually does buy it and take it public so we can stop really worrying about whether it's profitable or not or how profitable it is. But the point I want to make to you is just how important it is to understand price and price charts. So you can immediately go to a price chart and be like, oh, that's a dumb offer. No one's ever going to take that. Okay, so that's Twitter. Let me get rid of this here. And then I'm going to talk about the dollar. And I want to talk about the dollar because, well, it's really going up. Now, the thing about the dollar, whether you like it, don't like it, think it's worth what it's worth, don't think it's worth what it's worth, is it's the world reserve currency still, right? It's the biggest fiat currency on the planet. It's the biggest currency on the planet. And guess where people panic when they get worried? Not Bitcoin, not Ethereum. Yep, they're still going into the US dollar. It was taken off the gold standard in August of 1971, pretty close, if it's not exactly August of 71. And guess what? People still panic into the dollar, and that's what's going on. So my biggest worry kind of about what's going on with the markets right now, because the stock markets are going sideways. That's another thing I really want you to take from this call. The markets are going sideways. I can look at them in a moment. But when people start moving into the US dollar specifically, that is a warning sign that people are getting more and more scared because they cannot move into bonds anymore because bonds are absolutely collapsing. I can use that word collapsing because that's what's going on with bonds. Here's a price chart of US bonds here, BND. And yep, that is collapsing. If we look at BND without its dividend reinvested, you can see that it is below the COVID low. That's a big, big, big problem if you own bonds. This isn't a structural, I don't want to say structural collapse because that sounds too hypey, but it's kind of in a structural collapse right now. Now, the only thing that's not in this is inflation-protected Treasuries, which are here, and they did a triple top, and that's not really a good sign for something this major of an asset to do a triple top there, and that's what they did, and they are breaking down. So we have all bonds breaking down. BNDX is international bonds. They look just as bad as U.S. bonds. So people are staying away from that entire asset class, and they are going into the U.S. dollar. Now, here's the thing. This right here is on the screen. I'm just showing you where people panicked into during the COVID crash. And notice that it's right in that arena. So we could be getting close to peak hysteria, where the market does kind of a clean out and bottoms out, which is very likely. There are definitely parts of the market that are looking strong and parts of the market that are looking weak. I just looked at Microsoft today, and Microsoft it really needs to stay above that. Microsoft, I've been having a hard time speaking today. Microsoft is down 18% basically for the year, and that's what it is. So that has to hold. But as far as the overall market, I just put in VTI. That's all the stocks in the US. It's, it's messy, it's ugly, it's sidewaysy. I want to keep some where the price pops out on the top and pops out below. But generally speaking, it's going sideways, as are almost all stock markets in the world except emerging markets. Emerging markets are falling. They are still in a downtrend. They started their downtrend in February of last year, and they are continuing. Now, part of the reason it's continuing is because the US dollar is so strong, and that does hurt emerging markets more than almost any other place. Okay, so I talked about Twitter. Here's something I want you to think about this weekend. Before the pandemic, 160 million Americans would wake up, shower, get dressed in pretty clothes, maybe get a bite to eat, get in their car, get on the train, get in a bus. They'd go to another building 10, 20, 30 minutes, an hour away, 2 hours away, and they'd work in that building. And then they'd reverse their course and come home. And they'd redo that I know, sounds crazy, 5 times a week. And if they want to do a presentation, they'd get on a plane. Yeah, well, okay, they'd go to the airport, get on a plane, fly there, get to another airport, go to a hotel, eat food that's bad for them, do a presentation, go back to the hotel, then go to the airport, then fly back home. That's not happening anymore. So before the pandemic, 160 million people were going to work 5 days a week. Today, it's not 160 million. I have to actually look how many. I wrote it down, how many it is. 64 million. 64 million are now going to work. Before 160 million, now 64 million. So almost 100 million less. Now, the reason I'm bringing this up, and we are talking about the markets, is because I just want you to think about how this impacts everything, right? So here is the yield on the 10-year Treasury. It's going to impact that, right? It's going to impact everything. It's going to impact how people operate. Clearly, people are not buying as many Pelotons as they were before. It's now about an $8 billion market cap company. All right, maybe it's worth that, maybe it's not. Who's going to buy it? Nike's got to buy this. I think Nike's got to buy Peloton. It's such a great brand. Maybe, I don't know, Apple buys it and throws it in with their exercise stuff. But at $8 billion, now, it won't go for $8 billion, but it's starting to get to this place where people can really think about buying it. So this is where we are. We have people panicking into the dollar. Now, I want to go back to the dollar for a second, because what I wanted to do, and I didn't do it while I was there, is I want to show to you super zoomed out, or at least more zoomed out, so I can show you where the panics usually stop. And this is important. So the top blue line it gets there, it pops above it a little bit. This one right here, this 2016, 2017, that was really the Trump election. That was people getting really scared about Trump being elected the president of the United States, and the dollar really popped there. And then the second time the dollar broke above 100 was COVID. So here we are with the dollar just above 100. And the question is, are we going to have another spike? If we have another spike and then it calms down, that's actually a really good sign for the stability of the stock market. Nothing to do with the bond market, because the bond market is basically dead for now. But what we have is US dollar cranking higher while still in a trend. We have the stock market going sideways, weakening, okay, but still in that sideways trend. And lastly is just the general commodities that are just, that's way too zoomed out, everyone. Let's not be so zoomed out. is commodities just continuing to move higher. Now, commodities tell us more about inflation than really most things, right? Commodities are kind of the grocery store of what you need to build things, and those are going higher. So you want to follow price. You want to be in things that are moving higher: metals, precious metals, energy, commodities, agriculture. That's where money is flowing, and it was flowing way before Ukraine. It was flowing in there before this year started. That's where money is flowing. Okay, so let's wrap this up to a place where we can kind of land the plane, because I want there to be a way that you can just take away and go, okay, that's where we are. I do want you to think about the question: 160 million Americans going to work every day, 5 days a week, now down to 64 million a day. And we really want you to think about that structural change, because it's going to change real estate. You do not need to live within 20 or 30 minutes of your office anymore. If you are a knowledge worker, you can go live anywhere you want, probably on the planet, as long as there's good internet service. This is going to keep the pressure on for real estate. And I know mortgage rates are up. We talked about it, I believe it was last week. But I think what's happening is people are getting in. They're getting into the market before the rates go up anymore. So kind of there's this last push type thing going on. And because the pandemic reframed life, like, what am I doing with my life? I want the nicer car. I want the nicer vacations. I don't want to, commute to work. It's really changing everything. I want you to think about how that's going to impact everything. And that may keep real estate high. So, takeaway: real estate may stay stronger than people realize it can. The stock market going sideways, still sideways, but looking kind of weaker now within that channel. Commodities are absolutely still the place to be. Thanks, everybody, for being in my world and my inability to speak clearly today. Thank you for that. Please leave a comment, hit the like button. Tell me where I got it right, where did I get it wrong, what did I miss? I read all my comments. And of course, if you like this video, you will like our other videos. Thanks so much. I appreciate you being in my world, and I will see you on the next video. Okay, bye.